Good morning and a very warm welcome to Newsline, live from the Newsfirst studios in Dawson Street in Colombo. And joining me this morning is Anushka Vijay-Singer, the Chief Economist of the Ceylon Chamber of Commerce. Good morning, Anushka.
Hi, good morning.
And thank you for getting up so early and getting here on time.
Budget is always exciting time for economists, so I'm happy to be on the show.
Excellent. And how exciting is this budget?
So it's quite exciting because it's quite a shift from the tone of previous budgets. It focuses a lot more on the private sector role in the economy, creating more space for private sector activity. It's also exciting because it's trying to tackle some of the big, tricky bogeymen, if you want, of budgets past. The fertilizer subsidy, welfare transfers, pensions, some state-owned enterprises. But it's also exciting in a different way because it's projecting some very ambitious increases in revenue, and it's higher than it has ever been. So I think we need to the final verdict on it will be a year from now to see if that amount of revenue was actually collected.
Is it really necessary to be so ambitious if one knows that one is going to have difficulty in collecting this money?
I think the point of departure is that there's an increase in public investment that has been estimated this time. For instance, particularly in education. So we're seeing, there was this whole debate about Sri Lanka needs to spend more on education, this whole 6% of GDP argument, and now we're seeing it get very close to that. So from almost less than 2% of GDP, it's now going to over 6%. So big increase in spending on schools, science labs, electronics labs, and so on, a new university, and a lot of things on education. So if that amount of expenditure is going to happen, it needs to come from somewhere. So there's a lot of ambitious spending, so you have to get ambitious on the revenue, otherwise we're going to have to borrow a lot more.
I don't mean to be the party pooper here, but how geared up is our public servants to collect this money? How does the Minister of Finance get them moving?
So I think a strong message has gone to Inland Revenue that they need to collect this revenue. But you're absolutely right, there have been years in the past where we just haven't met our revenue targets. But the institutions like the Inland Revenue have got a lot better. There's a lot more modernization now. In fact, there's a new IT system coming in called RAMIS, which is built by in consultation with ADB and so on. So a lot of work has been done to get better at collecting taxes. But if you see where the tax revenue in this budget is actually going to come from, it's less on areas that are harder to tax, so if you will, income tax. Income tax rates, in fact, have come down, and the revenue increase that they're projecting is actually lower next year than this year and years past. A lot of the revenue increases are going to come from taxes on goods and services, on external trade, on fees. Yeah, so it's somewhat easier to collect taxes on those. It's not necessarily a good thing because those are what you call indirect taxes. And I think the authorities are fairly well geared to collect that kind of taxes because it's administratively a little bit easier.
Do you have any statistics which would show us how much of money is collected from income tax, let's say, and how much it costs to collect that amount of money?
Very good question. There's I don't have that number right now, but I think the Inland Revenue Department does. It's called, self-explanatory, it's called the cost of collection. So they may have done their work to show that the cost of collecting 1 rupee more of income tax, the cost is more for them, the time is more for them than collecting 1 rupee more from, let's say, VAT or customs duty or things like that. So, and anyway, the cost of collection of certain types of income tax is definitely higher because you depend on people declaring the right income, then you have to go back and check, and you have to verify, you have to do audits. Whereas if an item passes through the port, you know what that tax is, you know what to collect. On VAT, it's there, you know what the item is, you know how much it is, you know how much to collect.
So, speaking generally, this new budget, latest budget, what is it? What does it spell for us? Is it good?
I think it's broadly good because it moves us in the direction of where we need to go to. Again, as an economist, we have a very ambitious wish list of reforms, of the reforms the country should go towards. And it's hard to expect all of those to be packaged into one budget. Particularly hard when it's a government, a UNP-led government that does not command the full majority in parliament. You have a unity government, you have local government elections coming next year. So I think we were not anticipating a big bang of reforms. So in that sense, within what I think is politically feasible, it goes a long way. And like I said, particularly because it tackles some tough issues. I would call them untouchables almost. The fertilizer subsidy, pensions for public servants, getting them to contribute to that pension. The school uniform, about moving to a voucher system, thinking about selling certain government stakes in state-owned enterprises. Those were in this basket of untouchables, what was shut, and no one wanted to touch it. And now it's being touched at least. Let's see if they actually go ahead with it. So on those counts, overall it's good. But you're right, on some items it's going to be tricky in the short term. Like middle-class household that was aspiring to buy a car. Very expensive now. Certain other elements will make this, pinching in the short term. But in a sense, budgets can't only look at the short term. They have to look at, what is the structure of the economy that we want to carve out. And maybe that comes at a few short-term costs for different groups of people.
And what message is there, or what encouragement is in this budget to attract foreign investment into Sri Lanka?
Actually, this budget has a lot of good messages for foreign investment, and it comes on the backdrop of a lot of bad messages that had come in. We tended to think that the war was over. Sri Lanka is an attractive location, and we ought to get foreign investment, right? Why not? But the fact is, we were competing alongside other countries that were also doing a lot of very interesting things, including Vietnam, Thailand. So it was important to get serious about our message on foreign investment. So this time a few things have made it attractive. One certainly is the very competitive income tax, corporate income tax rates, which are now at 15% for most companies. The issue with foreign ownership of land has now by and large been resolved. That very contentious lease tax on land ownership has been removed.
So they can lease it and not pay a special tax.
Exactly. And in some cases, if they bring in a certain amount of investment, they can actually own land, unlike before. So those are things foreign investors look for. But one other thing that they look for is consistency. So 6 months down the road, if some of these things get changed, or in implementation, if these things aren't as sweet as it seems in the budget, that's when it's going to become unstuck. So we need to get consistent, because foreign investors don't like consistency. Don't like inconsistency.
Well, what sort of message then, by that same token, will the foreigner wishing to invest in Sri Lanka will look at it and say, hang on, what are these one-off super gain taxes? Isn't that, to me, I think I looked it up, and there was some reference to Nazi Germany the last time these retrospective taxes were applied. Isn't the world going sort of progress from that sort of thing? And in Sri Lanka, doesn't that send the wrong message?
So in the interim budget, that was a very poor message we sent investors.
Yeah.
A super gains tax that you say is trying to fix an anomaly. There were political undertones.
Yeah.
On a very specific set of companies.
That's right.
And a one-off tax, not a good idea. I think since then the government seemed to have realized that it's not a good thing. And both in the Prime Minister's policy statement and in this budget, they clearly said these kind of taxes won't happen again. So let's see. But I think the reason governments, Sri Lankan governments from time to time have to resort to these measures is because we just don't collect the tax revenue needed to support spending. So suddenly you have a cash shortage and you have to go after, easy taxes, big ticket items. So this fiscal consolidation, moving towards a lower budget deficit is important. Otherwise, every 3-4 years you may have a government, a treasury that has to, impose these huge one-off taxes.
These one-off retrospective taxes reminds me of what one Gerald Ratner did to his company called Ratner's the Jewellers in England some years ago. He pitched up at his annual general meeting and he told his shareholders that their company sold the jewellery they sold, the lower end items was where they made the most money, and he said that it was all crap. It wasn't surprising then that his company's finances took a dive and he had to then exit the company, this family company. It reminds me of that story when I hear the Prime Minister now saying, "Oh, we won't do that again."
See, that's the problem when you do these one-off measures. So let's take another example of the so-called expropriation bill a few years ago. Again, the government said, "Oh, this is just a one-off. We need to correct an anomaly. These businesses haven't been paying their dues or haven't been performing well. So it's only a one-time. Don't worry, we'll never do this again." Investors were really worried because if a government can do it once, what's stopping them from doing it again? So I think you need to build confidence, and we're seeing that happen now, building confidence in the investor community, saying that was a short-term measure. We were in a 6, 7, 8 months period where we had promised all this spending, so we had to collect all this tax. It won't happen again. And I think why it'll be difficult to do this kind of thing again is because now you have sent a very positive signal to investors, and investment will actually likely come in. Once you see that flowing in, it makes it very hard to do these kind of almost punitive taxes, because that will send a very bad message and it will undo a lot of things. So I think it will make it very difficult for a government to go back on their word, because it will have a huge negative signaling effect.
Will matters like the issues of governance, really, like, for example, on the central bank on a bond matter and so on, where there is a lot of public consternation as to something is not quite right. And the government's sort of failure to address these issues, doesn't that also add to the whole ambience of negativity when somebody is looking at investing in Sri Lanka?
I think so. I think the investors form an overall opinion about the country. When you have run on the back of, on a ticket of good governance, on transparency, investors expect you to deliver on that. It's the same with taxes. If you come out and say we're moving to a lower tax regime, we're moving towards more friendly investment measures, investors expect you to deliver on that. If you've said you're going to collect this amount of tax revenue, this much of a budget deficit, investors expect you to deliver on that. As you slip up on some of those things, the impression that investors get changes. So I think you're right, this can't be seen as isolated from the others. On many of these, the overall message, if you're an investor sitting in either in East Asia or in the West, and you have to pick up, you're looking, where shall I go? Where shall I invest? You look at a few factors. You look at the location. Okay, I want to locate in Asia. I want to locate in proximity to a fast-growing economy like India, or I want to locate close to Southeast Asia where the action is happening. And then you begin to look at where is there a good government, where is there low taxes, consistent policy. And I think we need to be sure that when they do that checklist, Sri Lanka ticks it all off.
Right. We'll take a short break and we'll come back to find out about the perceptions and how many tick boxes we've ticked off. Stay tuned. Welcome back to Newsline, and good morning to you. And joining us this morning is Anushka Vijay-Singha, the Chief Economist from the Ceylon Chamber of Commerce. So, perceptions. Is it something that the Finance Minister can travel around the world and sell? But this is good news. Sri Lanka is open for business.
I think that's a message that you can deliver on this budget. You have lower tax rates than in many parts of the world, 15% for most companies.
That's right.
You have a lot of commitments to making it easier for investors, whether it's land ownership, whether it's starting a business, whether it's getting investment approvals. So on many of the things that investors look for, a lot of good things have been announced in the budget, and these are certainly things you can go out and sell.
Right.
But what we have to remember is that we are competing for those same investors along with many other countries that are doing probably equally good things. So there are other things that we need to remember, that the gap between what you promise and the reality. So for instance, are we opening ourselves up to new markets? Are we signing new trade agreements? Is our workforce competitive enough for a enterprise to come and locate here? So I think we need to remember that the signaling is a big part of it. Those policies are good and certainly attractive. It will get people into the room, whereas earlier people weren't interested in coming to the room. But once you bring them into the room and you bring them back home, they need to see the same thing happening. They need to see that there is no gap between the rhetoric and the reality. And in that, I think we have, in the past, we have not done too well. Let's hope that we do well on this count. But on one thing that, we often assume that foreign investors go after tax incentives. Where are they going to give us the most generous tax incentives? But the new research coming out shows that investors are a lot more concerned about other things, like policy consistency, like is there a good skilled workforce, is there transparent rules that are applied equally, is it investor friendly? On many of those we are getting better, particularly on the lower tax. Policy consistency has been zigzagging in the past. On skilled workforce, I think that's one of the big things we could come unstuck. We are now not as cheap as some of our competitors like Bangladesh and Cambodia and Vietnam. So the only way to compete is to just have a more skilled workforce.
What about the number of holidays we have in this country?
That is really, it's not something as economists we can add some value
What's
to.
The figure? 142.
But it's high, and it's higher than many countries. In fact, last week there was an investor who found everything perfect about Sri Lanka, but then he came across this number of holidays and he said, how can I shut my company for so many days a year?
142 if you add the weekend time.
Something we'll have to look at. But again, if there are a lot of countries that have either holidays or they have restrictions on the number of hours, particularly in Europe. We can't afford that in a sense because we're not as competitive. But if we do get competitive, if our workforce is very skilled, they're still going to come here regardless of the number of holidays. So we need to focus on what are those fundamentals that investors look for and make those attractive in Sri Lanka.
And where will we get this? I'm reading out a question from one of our viewers. Where will we attract this investment from?
I see it coming from many places. So Sri Lanka is in a fairly unique position that we have always been open to investment from most countries.
Yeah.
So I think we can attract investment from most countries. But if you drill down specifically, we have this huge opportunity being located so close to India. We have a trade agreement with India. We have a proposed services and investment agreement coming in with India. There will be a lot of investors who will come here to position themselves for the Indian market. And sometimes there's a tendency to say, okay, let's go target only investors from a certain country, from a certain region. Sri Lanka can't afford to do that. We're a small economy. We have to be open to the world. And we're getting now, in the last few weeks and months, I've met with investors from Norway who are interested in locating here, from Germany, from Switzerland, from Vietnam, from China. So it seems that what will matter is what makes Sri Lanka attractive to any business, and the country shouldn't matter to us. And that is, as an economist, I really want to stress that it really shouldn't matter which country it is. If we are getting good investors who will make solid investments here, will add to Sri Lanka's economy, it really shouldn't matter. And we're seeing that already happen, where there's interest from many different countries. We just haven't pursued them very well in the past.
Well, is that also because there are sort of understandings reached between what we call the rogues, and so the honest investors are basically, to use a term that Charlie Hebdo used last week, screwed.
We've had trouble attracting those kind of investors in the past. And if you look at some of the investments that came in just after the end of the war, it had been from a very few number of countries, and in a very few number of sectors. It was largely in real estate, in property, in hotels. But that is what makes a difference between a good investor and someone who's here because a deal was offered.
We've had
and I think if we get better on all of the fundamentals that I talked about, we're going to get the good guys. It's the good guys who are easily turned off by the bad policies. It's the good guys who have no patience to wade through murky waters, if you will. They are the guys who look at where is it easier for me to do business.
That's right.
And they will go there.
And that's what will happen.
Yes, and if we don't deliver on this, they're not going to look at us. So the gap between rhetoric and reality needs to be bridged, and then I think we will get the good investors who aren't coming just because there are tax incentives.
Yes, because that's not the end all.
Absolutely.
Is it? But of course, we must appear to be presenting an equitable and a real equitable playing field. Here we have strange scenarios where various leaks from the corporate, like the equivalent of WikiLeaks and so on, where we find that Sri Lankan business people have monies held overseas. There are sums. There's one group of people who have more money than the VAT scam, and that was a lot of money. There's recently we treated to various other sums of money that are held in Swiss accounts, for example, and the almost hapless foreign Minister of Finance, he said, well, bring it back and we'll look the other way. Well, you've got to do something. But doesn't all this indicate that our system, that we need a systemic change? Isn't that right?
Absolutely. And I think I trace it, all of the things that you said, I trace it to a period in which there was a lot of businesses, particularly domestic businesses, that benefited from special privileges, from protectionism, from special advantages granted. If we don't move out from that, two things are going to happen. One, outsiders don't feel like it's a level playing field and they can have a fair shot. And number two, those very firms are not going to be competitive. They're never going to know. It's this fundamental understanding of competition. If you're protected, if you're coddled, if you get special privileges, you don't become competitive. You have no incentive to innovate, to really, compete hard. So two things will happen. One, the good guys may not come because they don't feel it's a level playing field. And the guys who got protection, it actually does harm to them in the long term because they won't be dynamic and competitive because they are never under that pressure. So I think you're right. We need to move to a much more. And I think what happens is when you have a more open economy, when you're open to more foreign investment, this scenario begins to change because foreign investors are going to come and give you a run for your money if you're not truly competitive and if you're only depending on special privileges.
In terms, very quickly, we're running out of time. Do you think that they are setting when I'm looking at the exchange rate and so on, and it's sliding and sliding, 130 in January, it's about 140 nearly to the dollar. Do you think the stage is being set for the for the likes of maybe Mr. George Soros to turn up here and try his brand of economics in the country, do you think?
I think you should pose that to the governor of the central bank or the prime minister.
But the governor of the central bank lacks credibility, in my book, anyway.
So I think if purely from an economic point of view on the currency, our currency has historically been overvalued, and in recent years the central bank has had to use or has used the foreign reserves to defend the currency. So now we're seeing the bank trying to let it find its own level, and many emerging market currencies have slid, particularly after the yuan depreciation. So it's not unusual for our currency to slide. But on your specific question, I think I'm not the best person to answer that because no one is ever really aware of all the
little nuances.
All the little nuances.
Like the $54 million and so on, and the reasons why foreigners are able to. Once more, this policy has changed, and foreigners are now able to play the real estate field, if you like.
But again, on that, they actually said that it's only with certain amount of investment that you can own freehold land. And on the second, foreign investors, the cap on foreign investment in treasury bills was actually brought down. So it's actually from 12.5 or 12% to 10. So there's fewer amount of foreign holdings possible. But on the currency, pure economics argument, it needs to find its level without wasting our dollar reserves trying to defend it.
Thank you, Anushka Vijay Singh, the Chief Economist of the Ceylon Chamber of Commerce, for joining us, and we look forward to having you on our network one more time. We just hope that Sri Lanka isn't sliding away. On that note, opportunities don't happen, you create them. On that note, have a great day, take care, and God bless.